Problem 1-43, we're going to create an income statement, a statement of owner's equity, and the balance sheet. So in this video, we're going to be doing the statement of owner's equity here. So requirement 2, prepare the statement of owner's equity for the year ended December 31st, 2025. Enter any increases in capital prior to the subtotal and any decreases into capital below the subtotal. So we're going to need to open up our accounts here to get our information. And as always, we're going to have our 3-line heading at the top of the statement here. So the first line is the name of the company, which is West Company. And then we have the statement that we're working on. So this one is the statement of owner's equity. And then we also have the date here. So this one is for the year ended December 31st, 2025 for a date. And for this date here on the statements, we need to figure out whether this is for a single day or a period of time. For like the year ended here, December 31st, 2025. So remember, for this one, the statement of owner's equity, the goal is to show you what happened to equity over time. Because you'll see we have West Capital January 21st or January 1st, 2025, and then at the end of the year in 2025. And in between here, we have the things that affected capital over that period of time. So again, the statement of owner's equity is for a period of time. And then let's go back and review the formula for the statement of owner's equity. So we start with beginning capital. So over here in this box of accounts, we're looking for the capital account, and it is here, this West Capital, December 31st, 2024. Now notice here it says the capital on January 1st, 2025. So the previous day the balance was $54,000. So what happens with accounting years is the ending balance of one year becomes the beginning balance of the next year. So again, notice this says December 31st, 2024. So this is the ending balance of that year of 2024, which becomes the beginning balance of this year of 2025. So we can go ahead and input 54,000 here for our beginning capital. Then for our next item, we need to review our formula here for that statement of owner's equity to see what comes next. So next we add investments. Remember, BINDE, that's bind with an E, that stands for, the I stands for investments, also known as owner contributions. So in this box, we're going to look for something that says investments or owner contributions. So up here towards the top, we have owner contributions for 2025 are 28,000. So let's go ahead and input owner contribution here as the label and 28,000 as the amount. So what does that 28,000 mean? It means that the owner invested $28,000 of cash into the business as an owner contribution. So back to our formula again, the BINDE, the N stands for net income next. So where do we have net income? And where do we get the net income from? Is net income in this accounts box here? Well, no. Remember, in the formulas for the 3 statements, we always do the income statement first because we need to calculate net income. So we're going to take the net income from the income statement and then put it into the statement of owner's equity. So that net income, again, is coming from up here that we calculated for that 86,900. And that comes from our income statement that we did first. And then the publisher likes to do a total here, so we add these 3 together, the capital, beginning capital, owner's contribution, and net income for the year. And when we add those up, we're going to get 168,900. And then we're going to get back to our formula. So with BINDE, with an E. The D stands for draws. So this line will be withdrawals. Owner withdrawal. So now we need to look in our accounts table here and see if we have any owner withdrawals. So let's hunt those down. I see West withdrawals here for 30,000. So we're going to input a negative 30,000 since this is decreasing our equity. So that is why I'm putting a minus sign there. So then we can go ahead and open our calculator and do the math here for our ending capital. So we're going to take this subtotal here of 168,900. That was, again, that beginning capital, owner contribution, net income for the year added together, and then we subtract out the owner withdrawals to see how much we have left over. And that is 138,900 for the capital balance at the end of 2025. Let's close out of our calculator and minimize this, and then we can check our answer. Fantastic. So let's scroll back up for a second to review. So to analyze this really quickly, the main thing is we want to see capital go up for the year. So it was 54,000 and ended up with a lot more at 138,900. So capital went way up, and what's the main reason that capital went up? It's the large net income for the year, that 86,900 that bumped us up. So this company looks like it's doing pretty well. Okay, so for the next video, we'll do the balance sheet, which is down here.